Good mornings, UPB. It's my morning market video for Thursday, December 5th. You can see the market declined significantly until about 2 hours and 30 minutes before the close. And a significant rally brought us into positive territory before pulling back a little bit. But I think we're going to continue. Again, you got to side with, and you go back for the last 5 years. I mean, come on, look at this chart. Anyone trading against it and making money consistently is lying to you or trading with fake money. Or money that performs well when it does the opposite of what normally happens to money. When you short a market like this, right? And look at the action. I mean, you can go to some of the bearish blogs today talking about, oh, here it is. This is it. Whoop, there it is. Oh, no, not again. But again, if you pull up a trend line, let's see if we could do this trend line. You pull it up. We did kind of top out here, so you want to say the bearish perspective is intact still? Yeah, it's possible. We had a sharp rally. We had a significant pullback at the close on heavy volume. Maybe it's here. Maybe this is it. Maybe this is finally the moment the bears have been waiting for. All these yellow dots here since the Abenomics low in November, and then go all the way back. Here it is. Oh, here, this time. Oh, no, maybe this time. This time. This time. This time. Oh, no, this time. Do you get the point? You get the point I'm trying to make? Yeah, at some point we will pull back, but it's just, let's move on. Let's move on. I could talk about this all night. Let's go to Goldman Sachs, which is a trade I brought up in the chat room at optionmillionaires.com. Yeah, and with that trend still going higher, there are opportunities to make money for a pullback. And that's where I brought up at optionmillionaires.com. You see this purple line here? This goes all the way back to the 2009 lows. We are now a little bit below it, and I'm thinking Goldman Sachs, in spite of possible strength in the marketplace, is going to pull back, at least pull back to this mid 160 level, possibly low 160 level. And I got the 170 puts today, but I stuck to my plan. I'm out of them. I made almost a 75% profit, as I thought I would when I sent out the private tweet, and that's my plan. But they continued higher, hit $3 from my 148 entry, over 100% gain on those. So it was a nice gain in my last week's private Twitter alert, and in the chat room was this big candle here for Tesla. I got it at 120. They hit 1040. So it was a big move. I also brought this up in my video at optionmillionaires.com last week. So beautiful move there for Tesla. I also was talking about Tesla pulling back to the 138 level today. Was at the blog at optionmillionaires.com. This 135 level is significant support, but I think Tesla ultimately is going to hit 160 before the year's end, and I think it's going to be another lucrative move to the upside. We might handle here a little bit, consolidate, maybe pull back to the 135 level again before ramping up to the 160, 165 level before year's end. It's going to be pretty interesting. Same with Zillow. Zillow's been beaten down. You can see this long-term support line. We're right at it. We're at a precipice. We're either going to ramp higher or go lower. That's generally what you'll get in this. You know, when you go to Twitter, people talking about a stock, they're like, well, we're going to go higher, and if we don't, guess what? We're going to go lower. We're at support here. I'm looking for calls, basically, is what I'm going to tell you. Yeah, we could break to the downside. I don't think that's what's going to happen. And let me get my other. There we go. I want to zoom in. So anyway, I'm looking for calls here to the upside to approach this mid-90s level. And it's going to be, again, like the Tesla trade last week and like the Goldman Sachs trade earlier on Wednesday. It's going to be a very profitable move. So I would love to see it meander here a little bit at the open tomorrow. And I'll be buying some calls for upside for Zillow. It's a stock that's been beaten down, nobody likes, and I like it. How about VXX? This is a stock everybody likes, seemingly now. It's a great day trade stock, but look at it long term. Continues to melt lower. You can see the VIX was up today, and VXX, which tracks the short-term futures, you can see it hit 48.50 before dropping $2 into the close. Nasty. Again, it's the same with the S&P 500. I mean, it just continues to the upside. If you look longer term, why would you get in front of this freight train? Choo-choo. We have Big Lots reporting before the bell on Friday. To me, this stock declined today almost 5% before a late day rally. But you see this big candle to the downside. Either somebody knows something, or gosh, I don't know. Just stay away from this. Heading into earnings, you can see this trend line. If you draw it across, 134.50 would be support here on a decline, and we've seen we have some really nice gaps to the downside. So this is something you want to avoid. But if you were going to trade it, or if somebody said, "Oh, you have to trade big lots for earnings," well, I would say you would have to be biased towards the downside. That's big lots. How about GLD, which was up at about 3 hours into the trading session? It just spiked. It was about just after lunchtime. GLD closed at about 120, and right now gold futures are lower. And you can look at a chart for the GDX, which is the gold miners ETF. Very weak, but in spite of weakness, you see even from the decline up here at 57.50, and you go back even 5 years when a little bit further back, 3 years ago when we were at 65. There were bounces along the way on this decline. Look at this. I mean, significant bounces here. And then now we are, go all-time chart here, on 10-year, you can see we broke below significant support. And so GDX, no matter what way you look at this, we're going to head down at about 1750 level and possibly down to a double bottom here that we saw back in 2008. That's GDX, and the same with FCX, what I've been waiting to break to the downside, but I'm looking for a move down here to about the 2750 level. That's 2670. And you can see that head and shoulders pattern I thought did not break. It was very stubborn. Ultimately, though, it's going to break to the downside. FCX. We have lost some of the casino stocks just going crazy. But you see this channel for Las Vegas Sands broke to the upside. Of course, 2009 was priced for bankruptcy, hit a low of $2.03. Wish I would have bought there. Huh? Consolidated in this channel, finally breaking to the upside, hit new 52-week highs. Safe 74.50 went up almost 4%, and you can see there's a $134 stock. Not a stack. Back in the middle of 2007. So there's more upside to come here for Las Vegas Sands. You can see Wynn following as well, up 2.74%. You can see that beautiful pennant pattern that I pointed out. I like doing a pennant pattern. And you can see it broke out to the upside here. Let's go a little further back. There's the beautiful pennant. There we go. To the upside. So there's a lot more room to go here just based on this chart pattern for Wynn. For the Wynn Resorts. How about, and we go to eBay, which has a similar consolidation pattern. It's in this channel. I think ultimately it's going to break to the upside. Some analysts came out today, talked negatively about the stock, and that kind of weighed on it, down 1.62%. Let's look at the bond market, the TLT, which tracks the 20-year Treasury fund. Look at this. The significant weakness here today. I was talking about this topping pattern. It's taken a while to come to fruition, but I think ultimately we're going to see a nice dip down on the TLT, which is going to imply higher interest rates, which is going to spook investors at some point in time. As interest rates start to rise, the Federal Reserve will be faced with higher interest rates. It's not going to be a good thing, but we'll see how long Yellen can keep the TLT interest rates from exploding to the upside. And then finally, let's look at Apple, which is a stock I brought up a little while ago. I was talking about this move, and of course, if you were following my videos back early this summer, I thought Apple was going to hit new all-time highs, and we're getting pretty close here. And you see this breakout that we've had. I talked about it last week, and then I talked about it the previous week. This consolidation pattern was going to ultimately result in higher prices. The 535 calls last week at 35 cents hit, I don't know, over a 1,500% gain. And you can see we're breaking out here, and I think ultimately we're going to continue to the upside over $600 by the middle of December, and we're going to be approaching those new all-time highs in the short term, just as I thought we would. beautiful W pattern. And what I like to really point out is the long-term perspective on Apple. We had this beautiful move from 2003, consolidated in 2008, 2009. Beautiful move up to the highs we hit September of 2012. Pulled back. Everyone thought we were going to plummet. Apple's a dead and a dying stock. And no. And we're breaking out. This is the new up move that we saw, the 6-year move to the upside into 2009. 2009 saw a 3.5-year move. So we'll get a 1.5, 2-year move to the upside for Apple, which is going to bring us to about $750, $800 in the short term, in the middle of 2014 at the latest. All right, UPB here from OptionMillionaires.com. It's going to be another great trading session, looking at some Zillow calls. We'll see if the dust settles. Hopefully, I'll be getting to some GS puts again. The 170 puts did nicely for me today, and I put them at the private Twitter at OptionMillionaires.com, also in the chat room. So, all right, it's going to be a nice. And then we have, of course, the NFP, the non-farm payroll, coming out on Friday. So it's going to be interesting to end of the week. All right, UPB here. Everyone have a good morning. I'll see you at the chat room at OptionMillionaires.com. Goodbye.